Hi everyone, welcome back to Berich. I hope you're doing well today and you've had a wonderful day and you're settling down to spend a few minutes with me this evening as we talk about stocks and market news and to see where possibilities of investments and opportunities are there. That said, today I wanted to talk about how arbitrages appear in the market, and you may never know where an arbitrage might happen, and we'll tie it into specifically a stock, then talk about how opportunities might open based on this, and then how global and in Indian situations you should keep always an eye out. The company which I wanted to talk about was founded in 1992 by this person called Robert Greenberg. He was working in another company called LA Gear, and he left that and he started a company which was initially distributing shoes by another company called Doc Martin. They tried that for around a year and that failed. After that, in 1993, he started his own brand, and he's famous for the Chrome Dome. That was a famous subcult in the grunge scene in the US in the 1993s. They went public in 1999. Then in 2011, they entered performance sneakers, taking on the likes of Nike and Adidas. In 2019, they had a global sale of around over $5 billion. And now they're at almost 8.97 billion as of 2024. I'm, of course, talking about Skechers. They operate in 180 countries and have international sales, out of which 60% of their revenue comes from that. So, what is this Skechers? Most of us in India should know what Skechers are. It's a brand which is available across India. A lot of us have seen it, and some of us even bought it. Some of us love it. Some of us don't think it's a great pair of shoes, but that is for another video when we're talking about shoes and reviewing shoes. But here we're talking about the company itself. It is a company which is being traded at a valuation discount compared to its peers, much lower compared to something like Nike, which is upwards of 20s. These have been always in 11 points and 12 point PE range, and even the EBITDA is 8 to 10x. So they have a very strong brand, they have a very strong niche, and they've always been known for their comfort, and non-premium, non-athletic wear is where their strength is. They're not really known for their performance sneakers, they're more known for their comfort, and what you call non-athletic wear is what they're known for. So why am I talking about this suddenly? Well, if you'd been following Skechers, their share price went through a sudden burst of energy. A few days back, they were trading in the low 40s in the US. Suddenly, they have gone to $61, up almost $20 plus, and everyone's wondering what happened. Well, what happened was there's an interesting case of acquisition happening. There's a company called 3G Capital, which is a very famous acquisition company. They like to get themselves involved in companies like Skechers. 3G Capital was founded in 2004 by Brazilian investor Roro Paul Lehmann and Carlos Alberto Scupea and Marcel Herman Teles. Its headquarters in New York, right? They are They're known for being aggressive cost-cutting, zero-based budgeting, and turning around large consumer-facing companies. They've done this with Burger King. They've done this with your famous Budweisers. They've done it with Kraft, which they worked with Berkshire Hathaway, famously, and Heinz acquisition. So their investment philosophy in justice, long-term ownership, deep operational involvement, meaning they get down into the board, into the management, into the running of the company, and they try to increase efficiency and increase margins, profit margins on these companies. So this is the main reason they've decided to get their hands into Skechers. It's an all-cash deal. All cash means it's an open offer to all the shareholders saying, come and give us your share and we'll give you either $63 or we'll offer you $57 plus one unlisted, non-transferable equity share in this new private company which we're creating. It's not actually Skechers which you'll be getting. Skechers will be held by another company, a privately held company, and you'll get a non-transferable, unlisted, untradeable share in that company, plus $57. So this is the offer they've made. The board of Skechers is approved. The shareholders are overwhelmingly over 60% have voted for this and they said yes. And now it is a question of approval from the regulatory body, which there shouldn't be any problems, and this will go through. This is the main reason where you've seen this surge in price in Skechers. And there was an arbitrage, and that arbitrage was, if you bought it and managed to buy it at $40, $45 Skechers, now you can exchange it for a cool $20 per share. So those of you who did manage to invest into Skechers are likely to see some cash in hand, and I congratulate you for that. For those of you who missed it, don't worry. That's not the point of the video to tell you how to feel sad that you missed an opportunity. The point of the video is to tell you there are opportunities which will come like this if you keep your eyes open. Case in point, let's talk about Yes Bank. What is happening in Yes Bank? Should you be doing this? After all, you said this, Vinod, should I go and start looking at Yes Bank shares? No, I would not strongly suggest you look at Yes Bank. The Yes Bank is slightly different. It's a Japanese company which has been in talks, and they've been looking at buying Yes Bank. There's been rumors that SBI wants to get rid of it from their books and cash it in. And they were talking to various people, but out of nowhere, this Japanese company has come in and they've offered, and negotiations are pretty deep down inside. What is the name of this Japanese company? Sumitomo Mitsui, or SMBC. There are rumors saying it is under preliminary discussions. There are rumors saying there are further down the discussions, but it is interesting, and that is what has led to the spike in S Bank shares. Do realize S Bank is turned around, but it's not out of the woods. There's lots of problems with the S Bank, but one of the advantages the S Bank has, which SMBC is interested in, is it has a wide network across India. They have a lot of company accounts. They have a lot of salary accounts, so they have a huge network, and they can borrow in Japan at 0.5, and they can bring that cash and infuse it into Yes Bank, and they can lend it at 5%, 6%, even higher. So there's a arbitrage for someone like SMBC to make here. So they see this opportunity. As Indian investors, I would say we are far from the woods as far as all this is concerned, and this SMBC deal is not done and dusted, and nowhere should we be looking at it. The case in Federal Bank is different, where the management, which we have spoken about before, now Federal Bank is something of an opportunity there. It's not the same, but there's an opportunity there if you're a value investor, if you're looking at banks. But coming back to this arbitrage, these kind of arbitrages do appear in the market. In the US, there's another one, which is the US Steel and Nippon Steel, where a Japanese company is trying to take over US Steel. That has been on the works for quite a long time, where they're offering 42 today as I'm recording this video. In the last month, it has gone down all the way down to 39 and 38. And in the last 6 months, there were times when US Steel was down at even $30. So there's a huge arbitrage. Imagine if you're able to pick it up at $30 and Nippon Steel is offering $55 a share. But there's lots of roadblocks in that deal. Joe Biden didn't want to do it. Right now, Trump also doesn't want to do it. So there's a high risk, high reward situation there. I'm not personally encouraging you to look at US Steel, but I wanted to highlight these options are there. You never know with someone like Trump if he suddenly decides to take a U-turn on that, or in trade negotiations, the Japanese are able to push this through and telling the Americans, okay, we will take on so much from you, but you must give us this. I do not know what negotiations may happen. All that is very clear is in these uncertain times, there are opportunities available in the market for arbitrage like this. So as a value investor, you can always keep an eye out where if you find a value, you should look at it. And especially if there's an arbitrage where you can make a spread of this kind, where you make $20 for holding on to something, it's worth it. And these situations do come up in markets over and over again. It's a question of being patient and buying the right stock at the right value and holding on to it, understanding the business and seeing the opportunities. In these kind of sure companies, these opportunities are there. In kinds of fast retail, these opportunities are there. In finance, in manufacturing, in steel, in raw material, in commodities, everywhere across the spectrum, arbitrage opportunities do appear. In the case of even Manappuram, that we spoke about, Bain Capital, there's an opportunity there. So Thanks for watching the video. I hope I gave you some points of inspiration. Today myself, when I was looking at the market today, I was looking at IndusInd Bank. And IndusInd Bank is what I had put my Tiffin Coffee 2,000 rupees into. I'm curious to know if you did do any investment today in Tiffin Coffee, what you might have looked at. If you did, and you're feeling up to sharing, I'm there on Instagram. Come and catch me. I'll be talking about some Indian companies there and some Indian opportunities in Indian market news over there. While I'm going to try and keep Berich more towards international and American stocks and talk about more Indian and Indian related to you guys on the Instagram handle. Thanks for watching the video as always. I hope you had a wonderful day and a wonderful evening and you're ready to get yourself ready for tomorrow. Thanks for watching the video. Good night.